in our Chicago studio. All right, Tom. So we've got a busy couple days in front of us in terms of the Fed, though not much is expected in terms of a change in rates. But talk to us through what's in front of us.
Yeah, Diane, heading into the FOMC meeting tomorrow, expectations for a rate cut are basically zero, right? They're probably going to stay the course. I think if you take a look at just a month ago, they were expecting anywhere from 2 to 3 cuts later this year, especially in the second half. Those have kind of dwindled. Now they're only pricing in barely just 1 cut in through December, according to CME FedWatch tool. So those expectations of maybe easing inflationary pressures going away. And we've seen that in some of the data recently. We get PPI tomorrow morning ahead of the Fed announcement and Fed Chair Powell's presser. That came in a little bit hotter than anticipated last month. These are February readings. That core month or year over year was at 3.6% above expectations. We saw some of the PCE data starting to firm up a little bit. CPI data remains low, right? We're 2.4% on headline, a little bit higher on the core, but that doesn't take into account what's going on with crude oil prices. That's going to really negatively impact what maybe they thought inflation was going to do. And that's turned in the last couple of weeks since the conflict with Iran started. So I think a lot of the focus is going to be on what they need to do moving forward and versus what's coming down the pipeline as far as data goes. Now, they've got that dual mandate, right? Jobs starting to get weak here. Non-farm payrolls came in at minus 92,000, far below the plus 50,000 or more that they anticipated in that last read. So that's going to be a concern. How do they start juggling and weighing the difference between what they're seeing on the inflation side, which is probably going to start firming up even more with oil prices at $96, $95 a barrel, versus the job market, which is weakening, right? They've got a big balance here. What type of, voting are we going to see on potential rate cuts moving forward? Because we did have a couple dissenters in the last meeting.
And that's going to be the question, right? Will we see that same level of dissent this time around, especially given, both sides of the coin this seems like a very tricky meeting, right? With where prices of oil are now and will oil prices stabilize? It feels like this is really trying to read the crystal ball. That's a murky crystal ball, right? And what you mentioned about the job market. So what is going to matter more? And then, of course, there's now the worries that some have about stagflation risk or, stagflation light. Any final thoughts on the Fed or where the market goes from here, Tom, today?
Yeah, I don't think anybody's going to want to hear that word stagflation out of Jerome Powell's mouth, but we might be getting into that scenario where this takes place, where inflationary pressures continue to rise due to the uncertainty in the Middle East. But at the same time, the consumer's still out there spending. We've seen a pullback in GDP estimates over the last couple of weeks also. But the consumer's still out there spending. We've had decent retail sales data. Will that start to crack a little bit more where, hey, you know what, even if inflation's starting to firm up a little bit, maybe they do need to cut rates because the job market's weakening and the consumer's weakening. So they're going to have, a balancing act here. Yeah, you don't want to hear that stagflation word out of Jerome Powell's mouth, and he typically won't say that. He remains pretty balanced in his communication and rhetoric, which I expect more of. He's probably going to state that, hey, we've seen the 10-year yield over the last month, just over a month, go from 3.9% up to above 4.2%. So the market's actually doing the job for the Fed at this point, where we've seen a rise in interest rates, and that might allay some of the, maybe hardcore rhetoric. But yeah, he's typically pretty balanced in his commentary. I expect more of the same. But there might be that rhetoric that, hey, we don't need to do any cuts this year whatsoever. And, if we get that confirmation of the new Fed Chair Warsh soon, which doesn't look like it's imminent, that could also come up in the discussions.
All right. Thank you, Tom. That's Tom White, co-host of Fast Market. You can catch Tom later this afternoon. Shifting gears, taking a look at Delta Airlines. Joining us now for a breakdown in the move there, we've got Alex Coffey, co-host of NextGen. So oil prices are higher today, but that's not causing pressure for Delta after their latest update to guidance. Can you take us through some of the details here, Alex, and good morning to you.
Yeah, good morning, Diane. While presenting at an industrials conference put on by JP Morgan, Delta Airlines providing some guidance updates for their March quarter, and that information's led to about a 5% rally, as indicated by pre-market trading, as you mentioned, despite some of the volatility that we've seen in oil. Some of the things that were presented and taken from the slides at the conference: Delta Airlines now seeing Q1 revenue growth in the high single digits, previously having seen it in the 5 to 7% range. They see their March quarter non-fuel unit costs expected to be up mid-single digits year over year. This impacted by lower capacity and higher operating costs. They see that same March quarter earnings within the initial guidance range of 50 to 90 cents per share. And they say that capacity growth was impacted by winter storms. And again, these, points and comments taken from slides that were presented at a JP Morgan industrials conference.
All right. Thank you, Alex, for the breakdown there. Shares Delta Airlines rallying right now 5% just about there as it tries to recover some lost ground over the past month. Coming up, we'll break down the current macro environment, how rising oil prices are impacting the economic picture, and take a look at some stock picks for your portfolio. We've got Aaron Gibbs joining us next on Morning Movers.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Everybody gets
Live
in
from
trouble.
Chicago, this is Trading 360. I'm
Yeah,
Marley
bad,
Caden.
yeah,
We
that.
track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations,
Miss
earnings to
Lemons
policy,
face
it's a comprehensive view of the market every
cute.
trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
That'd be
We
a
walk
sick
you through
moment
trade
when they,
ideas
like,
with
more
structure,
wait
risk
till like a
management,
Christmas,
and a
like when
focus
they're
on
just getting out
execution.
of
From options
high school
to
or something,
earnings
I'd be like,
to
yeah,
volatility plays,
Merry
we
Christmas,
bring
you're rich as
decades
fuck.
of trading experience to every segment.
With real-time insight across
Don't
products
spend it on
and
a bitch.
sectors, we deliver what active traders need to stay ahead.
Better
Fast
be your wife,
Market
at
weekdays
least.
at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Morning Movers. I'm Diane King Hall, coming to you live from the floor of the New York Stock Exchange. Joining me now to connect the dots on the current economic environment, as well as some stock picks to consider. We want to welcome in our next guest. That is Aaron Gibbs, Chief Equity Strategist at Slate Stone. Aaron, good to see you. Love the green, the glasses, the green outfit as well.
Oh, is today
Happy St.
the
Patrick's
day?
Day to you. Let's start out with, okay, now that we got the fun stuff going, let's get into some of the heavier
all
stuff.
in
You say
theme.
there are 3 big market fears right now. One of those, you say,
Happy
recession
St.
risk
Patrick's
is
Day, y'all.
rising.
Oh, it's all about the
I've heard
money
some thoughts
today.
about stagflation or stagflation light. I haven't heard a lot yet about recession risk. What's your thought on that? Where do you see
I gotta change
what
that.
the
Let's go with the
market may
vibe.
be
It's all about the
missing,
green
or
today.
what some in the market are paying attention to? Your thoughts?
It's about the
So
green.
it's still low. We're still
Those-
talking, 20, 30% chance of a recession, but it's something that you just need to keep on your radar. And I think that whether we're talking about stagflation light or a full-on recession. Obviously, we're talking about a slowing economy. And so that fear is definitely on the horizon. And I think a lot of people have to look at it with an increased risk. And so we're looking at it with the big revisions that we saw come down for fourth quarter. And given where we're heading into with the Middle East and higher energy prices, this is just something that people should be aware of. And it's certainly, there's a lot of extra fear in the market. So we're going to see increased volatility because this is really something that could happen. Recessions are almost always accompanied by high oil prices. And so you obviously want to be aware of that potential risk out there.
Okay, and yeah, a great point about, I mean, listen, the reading on GDP came down to 0.7%, which was half of what was expected, half of the prior estimate, essentially. So that was tough. That was a tough pill to swallow. Let's talk about oil prices. You say they're complicating the Fed's next move. That does make sense, right? We've got oil prices higher once again. We've pulled back from $100 a barrel, but, you know, it's still pretty elevated. What's your thought on where this leaves the Fed?
Should have thought that logic.
So, like most people, I don't think that's going to certainly change this meeting or impact this meeting. But even though they say they like to look at core and they exclude energy prices, look, energy prices flow through to everything. It's essentially a tax on consumers. And so that is going to go into the prices. Maybe it might take a quarter or two, but it's certainly going to flow through into consumer prices, of which the items that the Fed does look at. And so that is something that we could see, again, ticking up. And we just know historically, you can't just exclude energy and say it doesn't, you know, it's more volatile, we're going to exclude it. If it's persistently high and, you know, we're seeing the markets come down a bit, that's something that they're going to have to take a look at. Fortunately, it looks like the markets think that this is going to be short-lived. This is not going to be persistently high oil prices, and this is going to resolve quickly. We all certainly hope for that. But if that changes, if the markets start acting like this is going to be persistent, it's something that the Fed is going to eventually have to deal with.
And it does. It feels like it's a really tricky balancing act for the Fed between, you know, high oil prices and inflation risk, and at the same time the job market. I know you say the job market is holding up, but the last jobs report wasn't great. Your thoughts on, you know, just that balancing act?
Whatever they want it to be.
Right, and if we see, you know, obviously weaker jobs, maybe we could finally see those cuts. Obviously, the markets are still expecting two cuts, and that just seems very difficult given the environment we are in right now with higher oil prices and potentially higher inflation. So, yeah, it's that tight wire that we've been talking about. And so ultimately, the easiest way to handle a tight wire is to do nothing rather than to overreact. So I think we're not going to see any reactions for a couple quarters from the Fed until we see some clear directions either on the job market or from inflation side.
And Aaron, let's talk about your third fear factor, private credit stress, right? It feels like that's something that's a little bit on the back burner. You know, when you're cooking, you put a pot on the back burner. You still have to kind of keep an eye on it because it could spill over, and it spills over and it creates a mess if you step away just for 1 second. What are you paying attention to here with regard to private credit stress, or what should investors be paying attention to here?
Show performance net.
So one of it is just to understand that if it comes back into the headlines, if it starts making headlines again, one of the things that investors have to do if they do have these lockouts, if they're unable to get liquiidity through their private credit options, the thing you end up doing is selling your liquid assets, right? You're going to go sell your high quality large cap names. And so we're going to see more volatility just within the equity market simply because people need cash and they need that liquidity. And so if we see big down days, which is really triggered by just liquidity settling rather than a real fear about the high quality names, that's just something to be aware of, and just that's potentially it presents some opportunity if people have to sell some high quality names, particularly liquid names. It's an opportunity to buy on those days rather than just jump in with the panic.
Okay, all right. Let's talk about some individual opportunities, some stocks that are on your list. Qorvo is one of
Significantly
those.
higher than that.
It's been
Okay.
under some pressure this year, but you see the
Accredited
potential for
is
an
not
entry
as
point. Tell us about your
cool as
thesis here.
qualified. Okay.
Sure. So Qorvo,
Damn.
they're really known for doing chips for smartphones.
investment
That's where a lot of their business has been
An
in the
investment
past.
advisor recommends
But they're ramping off. They're moving away from the smartphone chips, and that's one of the reasons they've gotten hit so hard. And they have been moving into aerospace, defense, and AI chips for quite some time, and we've seen that revenue shift. So I don't think that's fully reflected in the price. I think they've just been sort of beaten up because they're like, oh, they're a smartphone chip maker. They're not on the AI or aerospace defense, but that's actually not true when we look at their revenue mix, where they've been for the past quarter or so, and where they're heading towards their guidance.
How is
So
that not
I think this is one stock
limited down?
that really has been beaten up and is definitely a buying opportunity at this point.
Okay, and then Talon Energy, I want to get into that one. TLN is the ticker here. All about AI power demand. It has been under some pressure so far this year, but you see opportunity here. Tell us about that.
Sure. Another one that's really taken a beating over the past few weeks.
That's the same thing as generating additional income.
Hit hard, but they are they sell directly to
I'm
wholesale
kind of mad
buyers
about
for
this one.
energy. So they're not a utility company. They're selling directly to Amazon. They're building their own energy centers for these data centers. And so really very good. They're dispersed
I don't
between,
see
they have
how
natural gas,
B is wrong, though.
nuclear, and so they are able to deliver those energies exactly at the rates that they want, and just are expanding
You own
exponentially.
100
So
of them.
just a
You're
great
making
AI
extra
story,
income off of that
not
100.
necessarily a
Whatever.
utility story.
I don't know.
And the last one on your list, really
It's not
quickly,
like I could
Carpenter
just argue during
Technology.
this
It's
stuff. It's funny
outperformed the
how we-
S&P 500 year to date, though
Just stand up.
recently
Don't like this
little challenging.
gotta
Tell us
go.
really quickly about that one.
Sure. They're very high-end materials. They're sort of the picks and the shovels of
They give
the
you 30 days.
aerospace area. So they really build
I
those
remember that
basic
one. I thought
components.
they gave you 10. I was
And
like, you gotta
another
count.
area that's really been growing. Certainly, we're going to see some increased spending, perhaps on defense, and these are the guys that are going to make a profit from that.
All right, Aaron, good stuff as per usual. That's Aaron Gibbs, Chief Equity Strategist at Sladestone Wealth. We always appreciate your time. Have a great rest of your day. Coming up, time for Options Corner. We'll chart and trade Lululemon ahead of its earnings that come after the close today. Morning Movers will be right back.
When it comes to suitability, it requires broker-dealers to consider the brokers.
Hey, investors, you know the market moves.
We gotta do that anyways.
Schwab is here to help you move with it.
Financial.
So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing,
Yeah, customer
saving,
factors. There we
spending,
go.
or even retiring, you can count
Can't
on
be
Schwab
self-centered
for
down
market
here.
insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen
Jeez.
Investing, where we track the trends
what? I
shaping
know
tomorrow's
this one.
market.
From tech to energy,
I
crypto
know
to
this one.
consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
I'm pretty sure it's. I'm pretty sure it's betas.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new
Oh,
little
thank goodness!
dependent.
It was either that or
That's for
standard
Schwab.
deviation. I get them
We have
mixed
everything
up.
we need all in one place.
Standard deviation.
I can set up her college fund.
I've been learning about new trading
That's
strategies.
gonna tell us.
Schwab helps me generate retirement.
Beta.
All
Beta
this
is
Schwab has
systematic.
everything you need is making me
Standard.
cranky.
That
Does
actually
somebody
makes
hear
sense now.
now?
Standard is unsystem. Yeah. Oh.
Invest
no, that
your
doesn't
way
make sense.
with Schwab.
Not in my brain.
Real-time market moves, earnings
Trainer ratio
breakdowns,
uses
and
beta
trade-ready
systematic
insights.
rates,
Follow
and
me
it's
on X at Sam_Vardas
denominator
and
law.
connect
The
with me
strike
on
ratio uses
LinkedIn or
standard
Instagram for
deviation.
more.
Total. Standard is the total. Standard.
Sometimes,
Beta is
you know,
systematic, not total. Beta.
you could have
or
done better.
Whatever. Oh, I gotta remember these.
Same goes for where you invest. Level up and invest smarter with Schwab.
And positive alpha indicates that the portfolio
We're
manager
back
is
on Morning
good
Lures.
at what he
Lululemon set to
does.
report quarterly results after the closing bell today. Analysts are expecting earnings of $4.77 per share on an adjusted basis
That's
on revenue of more than
extra
$3.5 billion.
We
Investors will look
take
for signs of a
Coach
turnaround from
and hire
Lululemon as
him,
its
give him a
stock has
job.
fallen nearly 70% from its all-time high set in late 2023 amid rising competition in athleisure and a more choosy consumer. Time
That's where
now
we're
for
gonna be
Options
after
Corner.
this.
Joining us to take a deeper look at the chart is Rick Ducat, lead market technician here for the Schwab Network. All right, Rick, take us through the trends you notice on this chart.
Yes, good morning. A difficult time for this
Discretionary
apparel
authority.
retailer here, down 51% during the past year. And we find ourselves in a time when these apparel stocks have a lot of question marks about kind of the whole tariff situation, but we can see a bit of a slide for most of them during the past year here. But still, Lulu in particular seeming to be the worst of the bunch here.
anything.
So now when we look
Change
at our
the
chart,
account
more specifically our candle chart for Lulu, we
designations.
find ourselves at a precarious point. We can see that backtracking, this green line here marks a series of repeated low points here, that level near about 159, 160 here. Now, yesterday we
I'd
dipped
imagine,
below
yeah.
that level. We
Discretion
recovered
is
to about
about
that point heading into
disclosing,
earnings,
telling,
but a
yeah,
difficult
when you're moving or
situation to
not,
be
yeah.
sure here. We
So
are
let me-
still
let me
within the
cook.
confines of our downward sloping trend line here, our channel type shape between our two white lines. So if we were to look at our
Yeah.
moving averages, they're
Does
not really
not
doing us any favors
authorize
here from this
withdrawals.
perspective
Got it.
either. Prices below
Yeah, when
all
it comes
four
to
of
the
them.
money,
They're all
still gotta
trending
get the
downward
A-OK.
here. They're continuing to diverge farther apart from each other. Our 5-day weekly EMA in dark blue comes in near 160, 155. That could be a short-term boundary to watch. The 21-day in teal, 170, 150 or so. We did manage to break above our downward sloping red trend line on the RSI, but as we head into earnings, that could be very quickly changed, so I wouldn't make too terribly much of that.
They
The
kinda
thing that would
are
concern me
the core, like
from a
they're-
volume perspective here is
I
that
don't
our
think they
point of
need
control, the
A-OK.
heaviest
If
trading
you hear
area of
from
all,
them, they
comes in
already
at
got
these
it.
lows here near 172. We're
Yeah,
below
they
that
can-
point
they
now,
could-
so
they could
we've
really
given up a
mess with you.
critical volume area here. So
be
we'll have
used
to
to
see if
compel-
earnings can be the catalyst that lifts this stock back up out of this dangerous area.
All right. What's the approach you would take for an example trade, especially with earnings in front of us?
So it doesn't sound like the technical picture is very good here. So considering our May 15th expiration
I
here,
have
about
to read the Constitution.
18.6% plus or minus. We've got this green box here
I don't know
representing
my
that
rights.
region here. We could consider
Who
a
really
more
doesn't?
bearish
Do
play
we
that would
even
be
really have 'em?
banking on the idea that we're going to
let's
take
talk about
out
money,
these
not
lows
rights.
if earnings disappoints here, and we'll see some continued
I have the
weakness
right to
over the
make
next
this
few months.
money.
So in this case, a butterfly type trade here. +1, May 15th, 155,
Eligibility.
140, 125, put butterfly at a 220 debit here. So selling two of our 140 strikes, buying one each of our
Yeah, there is.
155 and
Oh,
125
income
strikes here.
limits.
Max loss, 220. Our debit paid. Trade is risk defined here.
believe
So we
so.
have this kind of triangular shape here, kind of like a mountain type shape here. If we were to expire right at that short strike of 145 or 140 or so during the next 59 days, the potential max profit would be $1,280 here. So this would be kind of the way butterflies work. You have kind of this big range of potential profitability here, encompassing some of the area to the downside. We don't really know where that could land up during this situation here because we don't have a lot of prior lows to go off of that are any time near recent history here. So break even 1, 127.20, break even 2, 152.80, about a 20% and about 4.5% to the downside respectively. Expected move about 37%. So well within that range here would be this trade. And remember, you wouldn't have to hold it till expiration either, this example trade. You could just, if you do get a move that would be to the downside in a considerable way, you could just close it and just, move on.
All right. Thank you, Rick. That's an example trade there for Lululemon. Earnings due after the bell today. Crude oil still higher, but not as high as it was earlier this morning. Right now, up just a little bit more than 2%. So now you got nibbling happening in futures. S&P Mini is now better by 0.2%.
Extensive
NASDAQ 100
leverage, yeah, pretty much
futures
everything.
ticked higher as well,
Including
higher by a
orange.
little bit more than 0.1%. Dow futures better by
Categories
a
of
little
business,
bit more than
yeah,
1/4%. Small cap futures also higher
Bio
right
cap.
now as
Oh.
investors look to possibly
Wow.
extend yesterday's gains. Thank you so much, for joining us today on
It's
Morning
weird. I'm too
Movers.
young to even say
Diane
that I
King
could date
Hall.
myself.
Download the Schwab Network app.
But a
It's
filing
available in the
cabinet,
App
I
Store
don't
and
think
tune in
kids know what that
24/7 on
means.
SchwabNetwork.com. Stay
A
with us.
cabinet.
We've got opening bell.
They're like a kitchen?
Up next.
That's funny. Storage? Like data? No, like the chips. Go in the goddamn pantry.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage
Inflation,
your checking
Federal
and
Reserve,
investing
Treasury.
in one convenient location. Moving funds between
Scheisse,
your accounts
way
is easy.
wrong.
Cash move to your brokerage account is available
The
in
barrel.
seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
The feds use it to see what they're gonna do with the.
Welcome to Schwab Network.
But does not
where
publish it.
real-time
Maybe
market
they
coverage
should if they
meets
use it the
expert
most.
strategy.
Well, that would
From
be
the opening
biased.
bell
Well,
to the closing bell, we've got you
it's
covered.
bias and everything. It seems like nowadays.
Get inside the minds of pro traders.
My point is that they're getting
Neither
a
publishes.
higher rate of change
Okay.
in sales based on their guidance, but not the same
Alright,
rate of change on
third-party type
EPS.
shit.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
An order
With shows
ticket
built
for
action,
a
we break it all
market
down in real
order
time
would not
with speed,
include.
accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data.
It's a
veteran
market
traders,
order,
and
so it would
trusted
not have a
financial
limit
journalists
price.
Streaming live and
Why do I
online.
feel so
Schwab
smart?
Network,
But it's
streaming
because when I know they
24/7,
tried to trick me and they didn't.
anywhere, free. SchwabNetwork.com.
Because we do this at least 5 times a week.
Stroke, big
And when
shock
I see
to this
questions that I've seen
person
before,
I've always seen
I
as force in our family, be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live
Serves
coverage
its,
wherever you are.
Has its headquarters in that state only. No, that's not true. It's if they have an office there. Yeah, that's crazy. Like if you do one, well, that's why they just wouldn't. The business wouldn't be worth it. I'm not gonna open up an office out here, register just to get. You have to have like 100 million. Okay, yeah, I'll move here. Yeah, that's funny. You have forced my hand, sir. Or man. High yield bond fund would be most appropriate. Unless you're seeking high yield bonds.
Good
Credit risk.
morning and happy St. Patrick's Day. All right, I'm Nicole Petalides. Welcome to Schwab Network. This is Opening Bell, and we are live on the floor of the New York Stock Exchange. And we have a big hour for you. Of course, we're going to look at NVIDIA and oil and anything you want covered, we got it. Okay, so we'll start with the latest on the war in the Middle East. Crude oil right now, 95.16 the barrel as oil moves up. Sometimes stocks come
Higher
down.
income
Trump
with accepted
asks for
credit
a
risk.
delay in his China summit, focusing here at
On
home
investing
on
below,
obviously this
investment grade
war. In the
bonds rated
meantime,
B
we'll
or
look at
lower.
Jensen Wong, the
Yeah, for
keynote
higher yields, but
yesterday.
then there's credit rate risk.
Right then when he said the $1 trillion,
aggressive investors willing to
that's when
accept it.
stock took off
Junk
for
bonds,
NVIDIA. and we'll talk about that. The CEO of Venue will join me. You're right here at the desk. Really looking forward to speaking to J.W. Roth here to talk about the capital raise, the entertainment industry, what goes on live on stage, and all the venues that they have. In the meantime, here's a quick check of the markets. We are seeing some up arrows. I'm seeing major averages up about 1/4% for the S&P 500 futures at 67.74. The Nasdaq futures up 0.2%. The Dow futures up 1/3 of 1%. And
What is it? Low and long.
1/4%.
Oh, he said low and long.
And as I see oil and gold both higher, gold's at $5,016 a troy ounce, up 14 bucks. Oil's right below $95 a barrel, up $1.50. 22.67 for the VIX. The 10-year at 4.20.
Thank you, Dean.
Right, that's somewhat
Thank
of
you,
an improvement
D.
from
Low
4.25
and
if
long.
you're looking for rates to come
Duration
down.
is the highest for
And the
bonds with the
Bitcoin trade,
longer,
it's been the highest level we've seen in
low
some
and
time,
long.
right?
Oh,
Going back a little bit
OG.
here,
Hey,
78,040,
Series
but
7
it's
guru
notable.
out there. Shout
It
out
is
to Dean.
notable. Alex Coffey is
Low
with
and
me,
long.
co-host of Next Gen Investing,
Stock with
and
the beta
wanted to
of
get you set up for the
1.5
trading day. Of
would
course,
be
oil has been our lead story for 2 weeks, and we continue to focus on that. And we will, of course, look at NVIDIA too. But let's start with the oil story.
Yeah, crude oil continues to be driving the ship, Nicole, as you mentioned, and you see it again today, up modestly. All things considered, though, I think in the context of the war still raging on, mid-90s is probably something that the market can stomach. It may explain why you did see a bit of a turnaround in the equity futures here ahead of the opening bell. That said, if it continues to creep higher and meaningfully above that $100 mark, not only is that psychologically important to the trade, Nicole, but it's also symbolic of continued stress on not only this marketplace, but potentially consumers and businesses
I'd imagine it's
across the
50%
world.
positive.
As, arguably the most important commodity there is continues to see its price pressured as supply is constrained due to some of those straight blockages. Now, you did see crude oil above that mark yesterday. It retreated back to the 1-week exponential moving average, which now sits in the low 90s, where it did find support and continues to cling to that mark today. It tried to rally a bit overnight, got up to about 98, 99 in the active month April futures. So again, if you're looking at sort of a checklist of the marketplace, it may look at, maybe you're always looking at the S&P 500 first, but shortly after that, you're checking crude oil, you're checking volatility. Right now, volatility is down, but crude oil up modestly, certainly a development to keep our eyes on.
Yeah, and look, I heard, the White House senior advisor Hassett is saying that the coordinated oil reserve release could go up if that were needed, and that the U.S. is still fundamentally strong. So for those who are worried about an economic setback, for example, that is not in the picture at this moment. At the same time, we know that President Trump has delayed his meeting with President Xi. We got a sense of that yesterday when he was speaking. Scott Bessent yesterday said that may happen, and so we got that as expected, right?
Yeah, exactly right. And I think this does a couple things. It allows, the president and the American side to, delay a little bit on that front to focus a little bit more on the Middle Eastern front that is really dominating, mental, physical, and everything resource-wise. And it also is probably a welcome development from Beijing and China's perspective as well, as you think about
I don't even think I know what
aggregating
means.
Between these two, powerful nations and the kind of constant negotiations that have been going on for several years now, it gives both sides a little bit more time to kind of game plan and plan for that. But it also means status quo continues for at least a temporary period of time. And so from a market perspective, it doesn't inject new uncertainty. That said, though, it does kind of knock down some of the momentum of kind of working with the nations and getting things accomplished that, hopefully are, as much as they can be win-win for both sides.
Understood. All right. So you do have some tankers going through the strait, according to the senior White House Hassett, as you noted. So we'll continue to follow this story, but I'd like to see oil pull back even more, but it's certainly down from 120 where it was last Monday. The Federal Open Market Committee, the meeting begins today, and so what do we think about that?
Yeah, the story, Nicole, is very, very likely not to be about policy change, but rather forward guidance from the committee, notably from Jerome Powell at his press conference. If you look at the current implied probabilities based off Fed funds futures, you can see this on the CME Fed Watch tool. You're talking over 99% chance based off of the market pricing that rates will remain unchanged. That kind of outlier risk still remains a rate cut. So rate hike is just not on the table. That would be a tremendous, multi-standard deviation, black swan-like surprise, how unlikely that is at this point. But as you start to go out in time, again, the similar story becomes, even if you go to the April meeting or the June meeting, the odds are overwhelmingly in favor of rates being held where they are, as this pressure upwards on prices as a result of the geopolitical tension, and also growth remaining resilient in the U.S., or at least it has over the last several months, continues to kind of keep the Fed at its standstill as it has been for a while. All that to be said, forward guidance will do a lot to shape those future policy probabilities, and all eyes and ears will be on Jerome Powell when he takes the stage tomorrow afternoon.
All right, Alex Coffey, thank you so much. Always great to see you. Really appreciate it. And now we turn our attention over to senior markets correspondent Kevin Green and more on NVIDIA. Let's hear what's going on here.
Where we did see obviously some enthusiasm yesterday after Jensen Huang did speak at the conference here that they are holding, which is something that actually did hit the tape, was the $1 trillion in cumulative AI chip sales basically through 2027. We did see a pretty sharp reaction after that announcement. It did abate just a tad bit here, but we actually did see the stock close positive on the day. Now this is going to be driven by the Blackwell as well as Rubin architecture, and Jensen Huang actually did state that demand when it comes to compute has increased by 1 million times over the last 2 years, and they do believe that trajectory is going to continue. And they talked a little bit more about the CPU space. We know that GPUs
61. Yeah, that's what it is. Yeah, the 61-day window.
It continues to try to expand their product offering within that space, as well as the software offerings, and just providing a complete set for data centers as well as end users here. So overall, we actually did see a lot of stocks, especially in the technology space, really catch a little bit more of a bid because of this positive commentary. And today, we're just looking for a little bit of follow through here, Nicole, when it comes to the technology space, and this conference is still going on, so we might get more announcements over the coming days.
Yeah, I was really excited when we were hearing, about NVIDIA. We were talking about some of the things that he may or may not talk about, and that was Blackwell and data centers, the $1 trillion, the language of the $1 trillion, which I was sitting here and I was reading the likelihood from the betting sites, 98% likelihood he would say Blackwell and data center, an 89% likelihood that he would say the $1 trillion, which really talked about that addressable market, and whether he was going to talk about photon or photonics, which really would mean a faster move to revenue from the roadmap to revenue. And the minute he mentioned the $1 trillion, the stock went from 183 up to 187, and I said it right there at the closing bell. I was waiting for it, and the minute he said it, and Sam and I were sitting here, and then the stock took off. It didn't take off when we talked about what was changing in gaming. In fact, it really did nothing and dropped a buck. But when he talked about this $1 trillion, foresight going forward, I mean, that was really what gave a boost to the stock. Also, there's a partnership, too, that was maybe worth discussing.
It's not about
so Uber and NVIDIA are also
now.
partnering up to create a global robotaxi fleet. Now, this is going to be powered by NVIDIA's software, and they are looking at the initial rollout within Los Angeles as well as San Francisco starting in the first half of 2027. And they plan on expanding that to 28 global cities in 2028 across North America, Europe, Asia, as well as Australia. Now, what's going to be actually interesting about this, they're going to be rolling this out in phases, similar to what we have seen from Waymo as well as the taxi service from Tesla. The first phase is going to be the data collection from the vehicles and then training these models. The second phase is going to be operator supervised rides, and then obviously phase 3 is going to be full level for autonomy driving here. So this is actually a very good partnership when it comes to Uber that has tried to diversify their portfolio, and then over the long run, this could be actually accretive when it comes to top line revenue, as well as managing expenses. We are seeing Uber up over 3% in the session based on this news, and we might see a little bit more competition from obviously within the space when it comes to Tesla as well as Waymo. Right now, it's still a very small market, but it is expanding rapidly, and it seems like NVIDIA is trying to be a part of that, especially when you're looking at the fact that artificial intelligence goes from that software side now to kind of leveraging it for robotics. This is one step forward in order to try to accomplish that.
All right. Well, we see Uber relatively flat right there. I saw NVIDIA was up slightly a moment ago when I just checked it. Okay. Kevin Green, great to see you. Thank you for that. Coming up, we'll get you ready for the trading day. Tally Leger will be with us. Wealth Consulting Group. Opening bell. We'll be right back.
Beta. See. Final. Ha ha ha. Let's go. Come on. Wasted a lot of time on the test, but we got it right. What? Yes, uses beta systematic as a risk manager. Okay, yeah, beta. That's what I needed. Oh. Good. Which bond? The largest interest rates rose by high 1%. The largest decline. I'd imagine the one with the least amount of time.
This is Fast Market, built for traders who want
more
than
why
just
would I
headlines.
be right?
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Yeah, greater sensitivity.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn
with a strike
or
price
Instagram
of 50
for more.
when the stock is trading.
Welcome back to Opening Bell, getting you ready for the trading day. Tally Leger is with us, Chief Market Strategist of the Wealth Consulting Group. So glad you are with us. Of course, front and center is 2 weeks of the Iran war. We still are seeing back and forth, ammunition, for lack of a better word. At the same time, the Strait of Hormuz is seeing some tankers go through. Some of your thoughts?
So good to see this morning, Nicole.
I knew that.
We can't say that these geopolitical tensions were an entire surprise to us because we did lay out some of these headwinds in our outlook for the year. We just keep kind of checking those negative headlines off as we move through the first quarter. But given that this economy, and I'm talking about the U.S. here, is well supplied, it's energy independent, and our North American infrastructure is under no threat from an attack amidst this Iran conflict, I think the message from our West Texas intermediate crude oil price is that $100 prices fundamentally just aren't supported, and this market wants to decline here, Nicole.
No, primarily it would be the person that paid the premium because they get to do whatever they want.
You don't feel like buy the dips?
No, there's two ways we think about this from a technical perspective. Markets can correct in terms of price and in terms of time. And despite all the anxiety in these conversations, it's good to note that U.S. large cap equities are still within 5% of their all-time highs, which speaks to the resilience of this stock market. And so this has been a time correction, Nicole, and I think that there is still a pathway to our bullish outcome this year. We just need to get past these headwinds.
Yeah.
And so when the opportunity presents itself, how will you know, and what will be your plan of action?
So it's difficult to time the end of
that's solid, rock
the
solid.
war. We're not generals in the conflict, and so we don't have an inside track there.
Yeah,
but
we were talking about that last night, actually.
Shopping list handy.
Yeah,
and
when
we
it
do
comes
have
to
cash ready
stable coins and all that, that's what they're
one of the
gonna
very
start
powerful,
doing.
Kind of eye-catching rotations amidst the
Just
spike in
parking
oil
all of
has been the
money that they
parabolic
get from the
rotation
coins or for the coins, and then
from
parking it in
consumer
treasuries
discretionary to
and just
energy
eating off of the
stocks,
dividends,
which does
like
make sense
3-4%,
in the very
but
near
it's
term,
based off
but I
of
think it's
the
gone
U.S. economy, and they're just
for
eating
consumer
millions upon
cyclicals.
millions,
So
and
the way
then
I'd be playing this in
keeping
the
the
days
principal.
and weeks
It's
ahead,
really cool.
as we get some more
Oh,
encouraging
you gotta love
news on
financial
the war
engines.
front, is to start thinking about playing the consumer
Which
cyclicals,
statement
but from
about
an equal-weighted
American?
perspective. So look at exchange-traded funds like RSPD, and that does a couple things. That helps us manage Magnificent Seven risk in that sector, but it also gives us a way to play a potential small cap rebound once oil prices come back down.
Understood. So when you look at
Illegal
the
is all hell.
ETF conference, I mean, what kind of mood are people in? We know that ETFs have been particularly desirable, hot, have seen records last year. Even the first part
It's all right
of this
if it's
year
in
has
writing.
shown some
So I could
records.
lie
So
to
some
you
of your
if I
thoughts
write
there.
it down.
Yeah, so one of the
You can lie to me,
surprising
just do it in
stealth
cursive.
moves to many
Is there
at
a
the
bank?
conference,
No,
and we've been fortunate enough to be contrarians on this score, has been the bounce in software
Under a
stocks, which
bank
had been in a bear market
networking
since I want to say
arrangement
the
with a
summer.
broker-dealer,
And
which
so another
disclosure
ETF there
is
to
not
consider here in our
required. So the
conversations
banks and
is
the dealer are in
IGV.
cahoots.
That's the software exchange traded fund, and it has been quietly carving out a bottom. So again, not really related to the Iran conflict, but that could go a long way in terms of easing the pressure on the business development companies and the pressures in private
Networking
equity and credit
arrangements
and the broader financial
require
sector, which is
disclosure
another
that
kind of rate and
securities are
inflation
not
sensitive space.
Yeah, so you're in Vegas. First of all, thank you for getting up early for us. We
There is no
appreciate it
requirement
because
to
you're at the
disclose.
ETF
Oh.
exchange conference.
Dang, the
So we
wordings
do
on those
appreciate
get
that
me.
you did that. But when you're seeing people walking around, what are they
All right, which
saying? What is the mood there? You know, it sounds like you're more cautious, but the appetite has been evident. I mean, the market has been resilient. Are you hearing people saying, I want in, I'm buying dips?
So there is some of that. I had a
States can
similar
require
conversation
the
with Jan van Eck at Van Eck Funds. We're good friends.
to
I think
also
generally there is an
no.
awareness, and I've tried to do
States
our
can only
part
collect
on that
fees,
score
but
as well,
cannot invest.
that we are relatively fundamentally insulated from
States have
energy
no
price
authority.
spikes. And so this is another one to serve up to the audience here, that spending on energy
What
goods and
document formally
services
establishes
is
the
only
limited
4%
partnership as a
of
legal
total
business?
consumption, and it's just
Partnership
1%
prospectus.
of US GDP. Very
There it is.
different current scenario to where we were back in the 1980s. So the point is that consumers are relatively insulated from energy price spikes, and the broader economy is much more energy efficient
Non-spouse
now than it was
beneficiaries who
in past
inherit.
decades. So let's not get carried away here, Nicole.
Yeah, understood. Can we go back to IGV? I didn't hear. Did you say you like that, or which ETFs have been the ones that work for you or will work for you in the future? Do you think?
For sure. So in fair disclosure, I did sell XLY. That's the cap-weighted consumer
it's 10 years. They
discretionary
give 'em time.
ETF, and XLF. That's the
they give 'em time.
financial sector ETF. Back in early February, because I did not like the way they were acting heading into the new year, and that proved to be prescient. But now I think, given the parabolic move away from a rotation out of consumer cyclicals, I think this is a nice kind of potential contrarian entry point here, on the condition that we end the war in the next days and weeks, and oil comes back down the way it wants to go.
The
So I'd be
original
looking
plus whatever
at the
they
equal weighted consumer discretionary
minus
RSPD.
any
I also
incongruency.
like software for different reasons as a contrarian, because I think the selling similarly
Remedies
got
required.
overdone. So IGV is another one to keep on your list here, which is already working.
And how likely do you think it is that the war ends in days and weeks? Does that seem more likely than not to you?
You know, that could be the big surprise to investors here. I think when it comes to the oil market itself, which is in what we call a state of backwardation, where the front month futures contracts are quite a bit higher than the outer months futures contracts. The market itself here at home, as I say, doesn't believe that these elevated domestic oil prices are sustainable over the long run. The bond market is sending a similar message as well, judging by the five-year forward embedded inflation expectations in the Treasury market, which have been rock steady around 2%. And that has been the case over the past decade, Nicole. It seems like the bond market treats these energy spikes as temporary or transient supply shocks, not long-term hits to inflation expectations. So I would take that, if I were a policymaker, as another reason to keep lowering interest rates as the unemployment rate drifts higher here and payroll growth is still pretty weak.
So lower rates, you're a little worried about the labor picture to lower rates tomorrow, right? You're not expecting that, but you would like to see what, 2 or 3 cuts this year?
Yeah, well, it's a good point. There's a big difference between what the Fed is likely to do and what it should do. I'm talking about what it probably should do. And I'd be in the camp of a full point lower. If you consider where the federal funds rate is now, it's 3.5%, 3.75%. Pick your underlying prevailing rate of inflation, it's probably 1% lower from there. So I think there's plenty of scope for the Fed to keep lowering those rates.
I think I know this one. It's the highest payout when there's the least amount of risk to the debtor.
Which you did get out of, which obviously was prudent, obviously, because we're down about 10% on financials this year. And we are seeing the rate still at the higher end, right? We were 425 yesterday, we're 420 today. When will you get back into financials? When will you find financials attractive again?
So that's a good question. I think it similarly relates to the headlines and the pressures on the private equity and credit space related to the exposure to software.
Lower
so again,
payment, straight life, highest
I
payment.
think the selling was overdone in technology in that particular cohort, and I dipped my toe. I bought IGF back in early February, and it has been working. So if that trade continues, and we think that it does, that rotation out of semis into software, which was another nice early play, I think it goes a long way in terms of easing some of those concerns around private credit and the broader financial sector.
Trading on material now.
Tali Leger, thank you so much. Great to see you. Enjoy Vegas there. Chief Market Strategist, the Wealth Consulting Group. Thank you. Coming up, we'll just take a quick break. We'll get you counting down to the start of the trading day. Also, the CEO of Venue, J.W. Roth, will be joining me. I'm looking forward to that. All his concert venues all over the country. Going to have a great conversation. We'll be right back.
In a defined benefit plan.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk.
In a defined benefit pension. Oh, they should have said that. That would have given it away. Okay, defined benefit. It's a pension plan. Nice. The employer bears the investment risk. Yeah. Okay, pension plan.
Whether
Company
you're an
has a current
experienced
assets of
investor or just
500,000
getting started,
liability.
Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to
Working
schwab.com/coaching
capital is calculated as the current
and
assets
start learning
blah, blah, blah,
today.
blah. This metric measures a company's short-term and ability. Oh, I thought it was working capital meant like it was actually working.
I'm Marley Caden, live
Sounds like
from
lazy
Chicago.
capital.
We're tracking market movers,
All right, last
earnings
one.
reactions, and what
Investor
traders are watching
earns-
next. Stream Schwab Network live
Well,
at schwabnetwork.com.
Was that minus that?
Trading
right?
at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library.
There we go. All right. Yeah.
Filled with new online videos, webcasts, articles,
And we
courses,
got
and
a-
more. All
Cool.
crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique
That's
goals,
good.
you can spend less
73.
time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Opening Bell and happy St. Patrick's Day to you. We are live on the floor of the New York
Alrighty.
Stock Exchange. We're counting you down to the start of
Well,
trading. We actually have some up
I
arrows
think that'll
here after 3
conclude
weeks of selling.
another
And we had
finance
some
with
up arrows yesterday.
Reezuhn
Sam
session.
Bonas is joining me. Oil
Road to
sitting
the
at
65
around 95, a little
in
below
passing.
$95 the barrel. We're watching that.
Road to
Nvidia and
becoming
so much more.
an
Good morning,
investment
Sam.
Well,
advisor
the
and many
market's got the
other
memo
things.
as well. They are green for
So,
St. Patrick's Day, it seems, Nicole. In the
keep
words of
checking
Ed
in on
Yardeni,
us, and one
forecasting the
day,
weather
yeah,
is
we'll be able to
easier than
make
the
our money a lot
timeline
more.
of this conflict.
All
We
right,
have,
until
though,
then,
had a break in the weather,
move
he
with Reezuhn
explains. He
Finance
had
with
been
Reezuhn.
expecting a 10 to 15%
Look out for anything
correction here,
Reezuhn.
but the